So, good morning, everybody. Good morning, everybody. I am Linda Meadley. I'm a financial advisor with the Cooperators and have been for the last 6 years. I hope the life insurance seat here would thrive. And so there's many things that there's many products under the life insurance heading that we're going to go through here. As always, I like to introduce my team. And now this is an older picture. I'm hoping to get an updated picture now that we're able to get back to work. And because I do have a few new members to our team. With the Cooperators, we are a holistic provider of insurance and financial services. So you can get everything in one stop. We do everything from ICBC, home, travel, boat insurance, you name it, what kind of insurance. I have a commercial specialist who does business insurance. And then I myself do the life insurance and all the products under that heading. So the area I specialize in is life insurance, both term and permanent insurance, critical illness, which is a living benefit, disability, which is a paycheck replacement, and you've got group and single benefits that I can do as well. So today I want to talk about Mortgage Guard life insurance. Your home is your biggest asset and it's also your biggest debt. So it only makes good sense, financial sense, to have that fully protected. So more than 50% of all mortgage foreclosures happen because an interruption of earning ability due to accident, illness, or premature death. So this is why your financial plan should always start with your insurance and then savings. Because if something were to happen to you today, it could and would wipe out all your savings. So what would happen to your mortgage if your spouse dies? If you're unable to qualify for the mortgage on your own, the bank could refuse to renew your mortgage, and it's not a position you want to be in. We want to take a look today here at the difference between the creditor insurance that the bank is going to offer you versus true life insurance that you can get from the Cooperators. So who owns the policy? Well, under the bank owns the policy. With us, you would own the policy. So who is the beneficiary? The bank is the only beneficiary. Under our policy, you have a choice. You can name whoever you want as your beneficiary. What is the death benefit? So under the bank, it's only the outstanding mortgage on your balance. And under the Cooperators, your death benefit will stay the same. So whatever for the amount you purchased it at will stay the same for the entire length of your contract. Payments with the bank, it's going to change on every renewal or every new mortgage if you buy and sell. With our policy, the payments will not change regardless of what you do with your mortgage. Who controls the policy? So the bank is in full control of their policy as they're the owners of it. With ours, as you are the owner of it, you are in full control of this policy. Is your coverage portable to a new lender? So with a bank, no, it's not. You'd have to reapply again with the new lender. Ours is fully portable. It doesn't matter whether you sell your home, change your mortgage, or change your lender, nothing will change on your policy with us. What if you decide to buy a new home? Again, the same thing. You must reapply again with the bank, and you will pay new rates based on your age as well as your health. With our policy, again, nothing changes. That policy's in place. Your payments and your amount stay the same without any changes. And medical underwriting. This is probably the most important one. Is with the bank, they do all their underwriting at time of claim, which puts you at risk for possibly not being paid out on your claim. And it has happened. And it's happened from the major banks. And I've had clients come in saying that, their husband has died and the bank has denied our claim. And now the wife with children is in a very difficult financial situation, having to sell their home, not being able to afford the mortgage. You're doing the right thing by getting insurance and you see the value of it. So make sure that you're getting a policy that you're going to get paid out on. When you apply with the Cooperators, we do the underwriting at the time of application. Once you're approved, we are on hook to pay that policy out. So there's also additional riders you can add with us. If you have a mortgage, you can add critical illness to your policy as well. This is a policy that pays you a lump sum of money if you're diagnosed with one of the covered conditions. It's a tax-free lump sum of money that's paid to you to help towards financial burden that is associated with having a critical illness. It helps relieve the financial burden and so you can concentrate on just getting well. And we can also add a disability rider to the policy where it'll pay your mortgage payments if you happen to be disabled. So let's take a look at some examples. So not only is our policy better and stronger than what the bank is going to offer you, it's also cheaper. So these rates are taken right off the Royal Bank website. And here's a scenario of a 37-year-old couple that have a $500,000 mortgage, 25 years. So the best rate that the Royal Bank is offering is $170 a month. And our standard rate is $102.60. And our preferred rate is $86.85. So quite a bit lower than what the bank is offering. With the fact that we're on the hook to pay for the policy, whereas the bank still has to have the underwriting, and you don't even know if it will actually pay out. So what happens if there was a death? So again, the same couple, 20 years later, the husband passes away and the mortgage balance is over $40,000. The bank, all they're going to do is pay off that $40,000 mortgage. With the Cooperators, we're still going to pay out that full $500,000 to the named beneficiary. They can turn around and pay off the mortgage and keep the rest of the balance. The other scenario, what if both husband and wife pass away in 20 years? Again, the mortgage balance is still $40,000. Again, the bank is only going to pay out that $40,000. On the Cooperators life insurance policy, we're going to pay out $1 million, that's $500,000 on each, the husband and the wife, to the named beneficiary. Again, they can go in turn, pay off the mortgage, and keep the rest of the difference. Again, just going back to what the bank does their underwriting at time of claim, and they have a number of exclusions. So again, this is coming right off their website. This is everything that is excluded. Ours, we have one, right? We don't cover suicide in the first 2 years. Other than that, we are on the hook to pay the policy because we have approved it at time of application. So the process from start to finish, super easy nowadays, even easier than it was before because everything can be done virtually. We can do a phone or virtual or an in-person meeting. All our applications are submitted electronically. Electronic signatures via secure email sent to the client. The client is then contacted for a telephone interview and any other paramedical investigation that needs to be conducted. And then our underwriting department approves the application, and we then proceed to put the application in place. So why should you deal with the Cooperators? We've been in business since 1945. We're 100% Canadian owned. We have 42.9 billion in assets under administration. We have the best rating an insurance company can get in the insurance industry. And we are a cooperative, and we have cooperative values. So no shareholders. Our primary purpose is to do the right thing and not to increase profits. And remember, it's not about how much life insurance you need, but it's how much your family needs it if you're not there. Thank you, everybody. I hope you enjoyed this presentation today and found some valuable information, and I'd love to answer any questions that you have.